Hello, my name is Crypto Cube. It's been a while I recorded any video, so I just thought I should just show a bit of how I backtest some of these instruments I like to trade. And this is a volatility index or synthetic indices. So I've been looking at this pairs or these instruments for some days to weeks now, and this is a jump 75 index. So the jump index is a pair or an instrument that makes a jump, as in extremely big movement, 3 of it in a space of 1 hour, and it has 75% volatility. So I went far back into the past to see the data, mark out zones that would have interested me as if I were trading the pair live. So I will be looking at them to see how they react to those zones I've done. I'll be doing it from far back, and the moment I see how they react, I write it down, then I delete the zone. So that journal I'm keeping for the backtest is what I will go over to then see how they perform or what they react to. And I have the pairs that interest me opening in tabs, since the crypto market at this very moment is very boring. So there is nothing interesting. This is nasdaq, this is bitcoin, this is gold, and then some crypto coins. I'm holding OGN on spot. We have an airdrop coming soon, so this was my entry line. So up at this moment like 22%, was up before like 40%. We are not selling, waiting for the airdrop. So there is nothing interesting with the crypto market at this moment. So I'm using this opportunity to study this synthetic indices market. Then I can be able to tell which of the pairs or which of the instruments I'm going to trade and how I'm going to trade them. As you can see on this, I was able to write out some things I wanted to see happen in the market. So I'm following this now on the fly. I've done some backtests, I see some reactions from it. I draw my zones. If they react to supply demand, order flow, then which is market structure basically, or if they react to support and resistance. So, and here we have this demand from this breakout structure to the upside. We have this breakout structure at this point, move up, down, down. This is like an ABC correction, found support or demand here, then broke this side to create this side, and this was the zone leading to that break. Then it reacted. Then at the end, we saw this move break this zone, broke this zone too. So here became a supply. Then we had a kind of double bottom here, so we have resistance. The price came back to retest the resistance head, and this tiny move here, I put the question mark on breakout structure because I wasn't sure I want to see. I'm using icon sheet candles for this back testing, because if I switch to the normal candle, the noise is a lot. And when you have a lot of noise like this on an instrument, it can easily confuse your order flow. And what I mean by that is, when you are reading market structure and you are following, let me start from here. You are following, let's say, from this low to this side, back to this low, like that. You are reading your structure. Here, within here, we can easily count something like this, because we have these flows going below the low of this very candle's low. If this is too tiny, just forgive me for that. Then you see, it can easily convince the way you read structure. But then, okay, we have an high here, so this is a low, then this is another high there. So this can easily convince the way you read structure, and it can bring a lot of confusion. But when you have used this Fibonacci candle, it's kind of smoothing things out, because Fibonacci candles are smoothing candles, so they remove the noise. People call them trend following candles. So when the trend is up, instead of seeing some noise of some red or down candles, you see green candles. If the average of that candle is not enough to make a red candle. I'm not saying that there can be noise, but when you have noises, just take a look at this area. You see some wiki up and down candles like this very one. These very ones, they make wick to the top, wick to the bottoms. When you look at that on a lower time frame, sorry, this is not a multiple candle analysis, it's a multi-time frame analysis. So when you look at this particular area now on the normal candlesticks, you see a lot of noise. And if you want to restructure there or wave counts, it can be very, very dicey. But this can just smoothen it out. As you can see, this move up. Let me see on the other. Okay, this is a pure gray, and this move up. Let me see how it looks on the Asia candle. Okay, as you can see, we have a down movement here, we have a down movement here, but it's still smoothed out. So it allows for easy read of structures or order flow. So this particular point where you have this break of structure, if you look at it on the other candle, it is a good structure, but this particular candle was a low making and this was the high. So we have a move down, a return up. But here would have been a proper one where we have a clear move up, move down, and a clear move up with two up candles. And back to the Asia, we have these solid green candles, no wick to the bottom, which shows that there was a very massive movement to the upside for this bullish candle on Asia to have printed. And then we have this wiki candle to the up and down. Then so here would have been a proper break of structure, but here also works. So I wanted to see if this was a break of structure or this, because this is just a single up candle. Then if this was a break of structure, I wanted to see this demand hold. Then it came back a wavy structure, which I don't personally like. But at the end of the day, it ended up being a kind of flag. It ended up being a kind of flag. So we have 3 touches to the bottom, 1, 2, 3. After 3 touches to the bottom, we expect a breakout, which if you count from me, this is A, B, C, D, E, then a break, or 1, 2, 3, 4, 5, then a break. So that's why I'm using these Asia candles to trade this pair, because they can be very, very wiki. And this is a jump 25 index, 25% volatility. This is a jump 50 index. I've just zoomed in on this one to see where I will be interested, like every reversal points like here. I will mark it. As we can see, this led to the break of this major move up from this low. So this is it. So I will keep marking the reversal points to see what happened at those zones. I have not worked on this one, but I will. And then this also was a point of reversal after some pullbacks, and as you can see, price came to it sometimes and then it went back down. Then at this point, so I will also mark all these points to see what happened, that those probable demand zones got broken. So that is how I do it. I mark it from way back, then I open it up or zoom back out to then see what happened. That is why I have it like this on this particular jump 75. And then I also have jump 100, which I have marked. Wanted to see, this is an OTE, this is Fibonacci retracement level of 61 point something to 79, I guess. And I took the rulings from this point to this point, I think. Let me see again. Yeah, right. This is 61, 0.618, 0.705, 782. So I marked it. When price was there, but I didn't come back into it. So, which means if I take it back up like this, then I will mark the new zone. So I'm just seeing what these coins react to, and then as they break zones, like this supply was taken out, then as it was taken out with a wick, I built this demand. It didn't quite get to the point which I marked. But then if I had used the wick of this candle, probably would have failed. I wasn't taking a trade, I was just studying. Then we had a break of this continuation structure to the upside. Then here at this point would have been my other point of interest. As you can see again, this didn't get to where I would have been waiting to buy. Then we have a break of this high again to the upside, a small pullback, a break up again with no real solid candle cross above it, just 2 weeks. So here wouldn't have interested me. We came back into it, held, then up. But then I will be watching how price will react at this particular zone, because we saw or we see a big move from that particular area after the down move. Now we have a retracement back into it and it's holding. It might break, but then whatever happens, I like to see. Going back to the other candles, as you can see, we have up, down, up. We can also claim we have a down movement here. So if we have a down movement here, this means we have a break construction at this particular point. And if we have a break construction at this particular point, from that particular point there, this move is a retest, a retracement or retest of a supply somewhere above here. So this can be a retest of something above here like that. And then I will expect these zones to break. So I will be watching to see, and as you can see from that movement, here was a good candle. So I will be bold enough to take this to pay. I wish I was looking at the normal candlesticks here, saying this move, I wouldn't take this long. I will only be interested when price comes back, because taking a counter trade long might not be so good. But with this A-shape featuring it out means the move down from this particular area, since it's not red but green, is not that strong. So I will still be looking to see how it plays out. So I might have entered this trade, but then I'll be following it with tight stop loss. I might even be taken out at this particular point. I can't tell because I wasn't in the trade. And this is another one. This is volatility index itself, 25% volatility, R25 or V75 we do call it. So I marked some zones. It got broken after offering a little bounce. And this was also a counter trade because we can see the move up, move down, move up, and here we have a breakout structure. So it came back to retest this resistance, support or resistance. I would have been waiting at this point. It didn't quite get to it. Then it went down, a little move up bar, a shake candles. Then here we have a break construction. I would have taken this, and this would have given me a massive 10-hour plus trade. My stop will have been somewhere around there. And if I have the mind to hold up to this point, we have 6.2 and if I have the mind to hold up to this very high, then we have 8.7. Wow, almost 9 hours. But then as this break of structure happened, it wasn't convincing enough to me, so I drew it this long and I wanted to see if it will hold. And at the end of the day, it did. He held well. And after the break of this high again, no retracement. That is something I've noticed about these volatility indices. Most of them just breaks out without ever retracing to come back to fill maybe the zone we have at this point. No retracement. And that is why the jump index, they are a bit different. As you can see, jump 100, this is 100% volatility. We see some move up, move down, move up, move down. So it comes back to follow the other structure or other flow perfectly, but the volatility, it just keeps running up. And if you traders break out at this point, maybe the moment you see this breakout structure with solid crude above it like this candle, you enter along, place your stop loss below here, you catch a move. But then if you are not a serious breakout trader, if you just take breakouts, you make see it's not coming back, you jump in at any moment. What if you enter the trade and then it comes back? So trading breakout is not my specialty. Most times that I do trade breakout on the crypto market, I always get flogged. I do get flogged. So I don't want to take breakout trades because I might just place a breakout above this side and then it will fill me only to come back and retest this zone, and I will be like, oh wow, why the drawdown? Why can't I just be patient enough? Then here again, we saw this move up like an ABC. This is a strong move up. Then the moment it broke this particular highs, what did we see? It continued move up, no retracement of any sort to come and test this zone. And then this down candle, what did it do? It just came to test this resistance turn support now, as you can see after the break of that. But here we didn't have that retest of this high as resistance to support. But here we had it. So if you trade support resistance, good. Then you can just move your stocks below the wherever you want to put it. Then here we have some moves. As you can see, you can easily count the moves: up, down, up, down, up, down, up, higher than this, then break, retest, now down. And if you let me remove this now, and so here is where now that is the pattern, right? Now let me go to the normal candlesticks. So as you can see, it's still the same, but here it has a lot of noise. It has a lot of noise. So you can switch between A-shaped candles and normal candlesticks. Once you see something, you want to confirm if that is what is truly happening. So here now is a move up or a leg up. This breakout structure here, a retest, successful retest of this. What's it called now? Supply zone. Successful retest of this supply zone, and now I will be watching to see what happens at this particular point. This is a move up. Probably we'll get a retest up here, and then we continue move up. But then this is a great imbalance. We have a lot of gaps here to be filled. So we can just get a break of this zone, a little retest, and then coming to fill all these zones. And we might not, after a break of this, we might not even get a pullback. That's the problem. And if you look at the break of these particular lows, which was support, we got a break, a little move up. We would have expected that a move up should come from something like this, but no, kind of like reacted to this support, now turning resistance and coming down. So sometimes these assets, they flip between support and resistance, supply and demand, Fibonacci, and the likes. And this is the volatility 50 index, 50% volatility. Now what I've noticed from this particular one is it just basically reacts to support and resistance. We have a move down here, move up, move down, little break up here with close below it. Then it came back to this supply zone, fine. Then after the break of this particular lows, what happened? I might be expecting here or at least here. It didn't happen. It came back to this support, turn resistance, tested it, broke down. Then I will be expecting this side or at least this particular OB. That's an OB. It didn't happen. It came back to this support on resistance, broke down. Then what happened? We came up here from resistance, went down, came back to it, didn't get close below here, then came down. A little move up. Then here, this support now turn resistance, a little push and then close above it. Here didn't survive any resistance anymore. We broke the trend line. Then came back to this support, now turning resistance, push down. Then on this resistance now we turn support. We supported it twice, broke up. Probably this price came to this point like that. Support became a firm resistance. Now using this price turning resistance here as support again. Then it broke up. Now we found a bit of resistance here, came down. If I drew back to the past data, probably we have resistance here, we have support here, yeah. Then came above it, found a bit of support, broke down, and the moment it broke this particular low, which would have a breakout structure, this particular low, selecting this. After it broke this particular low, so what happened? It just came swinging down, no retracement of any sort. Either to retrace this resistance now or to retest the what's it called, supply. It just came crashing down, and it ignored all these other past previous levels. So the fresh levels are important. Then it came back up again, found resistance. Like if I draw this to the past, maybe we have a support or resistance. Then I mark this high because I wanted to see when price comes back here if it will offer support. Then this particular point that price came back there, found resistance. This move down, up, down. This will bring a break of structure. So trading supply and demand, I will be interested in levels like this. But then I want to see what this will react to. And this is volatility 75 units. I just looked at this roughly, marked the zone, a very, very old zone. It came over a small bounce, broke it down. I've not really looked at that. And this is another one I'm looking at. That is a volatility 100. So that's okay. I have this move, then up move, then this break of structure here. As you can see, no strong close above of it. It was just all weeks. So I wanted to see if this demand will hold. Then it came into it, gave a little bounce, broke the demand. Now we have a little green candle, but not so strong. So I said, can this be structure high? I thought this move up will come to offer maybe a break of it. So I wanted to see how this high will react to price. And if I go to this particular candle sticks, you can see clearly how this high is. We have a move down, a little move up, and this is a lot of noise. So let's filter the noise out. And okay, this is also the jump 50, jump 75. So I wanted to see, I was like trading this, I took some entries on it. I was short from this particular point, then long. So both went well. I got stopped out on a long, but the short was still in profit. So I noticed something else on this PS, this jump PS. So I'm maximizing the chart to see. I will start looking from here to the back or from back to the front to see every reversal point, how it actually reverse. This is the volatility 51 seconds index. So I just have that drawn out. I've not really touched it. So this is how I just backtest this, and the backtest on this particular TradingView for deriv is quite different because you do not have the backtest too. If you look at all these points, there is nothing you can see that offers you to backtest price the way you can backtest price here. As you can see, we have this bar replay here. So I can easily go back in time here and be playing this data. As you can see, it's moving up. Can increase the speed of movement, as you can see, but that one is not available on the deriv platform, TradingView platform. So it can be tricky. If I want to backtest this on the main deriv, on the main TradingView platform, I'm a premium user, so, and even I think free users on this can backtest. I have no question. I can just use the replay to come back to any point I want, and then follow the price movement. So if I see a zone that interests me, I draw it out. If I see a zone that interests me, I draw it out and take the trade like a live trade. But that is not possible with deriv TradingView platform. It's limited. That is why if TradingView can just pay, if deriv can pay TradingView to have their asset listed on the major platform, it will be very good, and people will even make more money because they have access to backtest a lot. But here I have to go back in time, looking at the chart and start drawing zones. It's not live, and I can easily cheat with this because I see the zone is holding. I do it like, okay, this is where my stop will be. Like for example, okay, let me see if, okay, look at this point now. We have this move down, move up, move down, move up. So this will be a zone. If this zone were to fail, I will know. Then I might not draw it because I've seen it failed. But here I'm just trying to draw everything. So that's how I do backtest on this. And right now I have a lot of data. As you can see, it's not funny. A lot of zones marked up that I have to go through. It's not funny. It's not funny. Sometimes I do get tired. Going through all these things. It's not easy. I wish the backtesting tool was available on this platform like this. It would be very, very much easier. And I'm not a fan of MT4 or MT5. So it's not easy. But trading is never easy. Only even the kingdom of God is not easy. It's the strongest get it by violence. So if we are to be strong in this game and make money, then we have to take it by violence. And from what I've noticed, the jump index is quite interesting compared to the volatility index. As you can see from all this, we have quite retracement and it follows the other flow. So that's it. I will backtest this, and whatever I decide, luckily I will let you guys know. Alright, that's it for today. Thank you guys for being with me.